was said about housing here. The hub of the entire financial sector crisis is still mortgages and housing. I mean, that's what Hank Paulson's been saying us again and again and again until he's blue in the face. So everything might get better when housing gets better. Is it? Celia Chen is Director of Housing Economics with MoodysEconomy.com. John Sauro is President of the North Atlantic Mortgage Corporation. All right, so if it all comes down to housing, and if housing is getting better, John, then you should be able to answer the bottom line question here, which is, can people get mortgages?
People can get mortgages, but things definitely have tightened up a great deal. It's not like what it used to be. The good news is that the stimulus package, the Fannie Mae Stimulus package, is allowing people to get jumbo loans up to $729,000 and change at much lower rates than what the jumbo rates are now. But the bad news is that a lot of products and a lot of banks are gone. You know, as Jamie Dimon mentioned, you know, 80% now is the rule. Can you get 10% down? You can, but on the jumbos, it's almost impossible. There's maybe one or two lenders out there that might go up to $850,000 on a loan with 10% down. But other products as well, such as option arms, which, you know, a lot of people have given that loan a bad rap. Those loans have been around since the mid-'80s, when interest rates were around 18%. That loan really helped people out back then be able to get loans at around 14. And I know that sounds crazy today, but those loans were not subprime loans. It's just unfortunate that the way the market handled those loans was not the proper way to handle them and didn't give them to the right people.
So John, in a word, before I bring in Celia, you're saying things have gotten better in terms of people's ability to get loans, in terms of people's ability to finance a home. It's not fixed, but it's getting better.
In some instances, it's getting better, but in other instances, it's not.
Okay, so Celia, what about the loan standard itself? I mean, we know standards were abysmally low and it was ridiculous and they needed to go higher. Okay, they've gone higher, a whole lot higher. I mean, if you look at a chart of lending standards, it's sort of a reverse ski slope of Mount Everest here.
That's right. If you look at the survey of senior bank loan officers that the Federal Reserve puts out every quarter, you can see for the past several quarters that more bankers are tightening lending standards, and this, of course, is having the impact of making credit more difficult to get for borrowers. The tightening is not just for those products that have seen the most problems in terms of mortgage delinquency rates rising, such as the subprime loans or the non-traditional loans, but the tightening is also occurring for prime borrowers, those who traditionally have had the best credit quality.
All right, so are we, and this is not a pricing question, okay, this is just in the housing market, are we starting to, at the bottom, I mean, things aren't going to get worse, at least, Celia? I mean, appears to be the real question.
Well, I think in terms of sales activity and in terms of construction activity, we're probably close to the bottom, but the bottom is going to be a long bottom. So we're going to be flat for a while. The lack of availability of credit is going to constrain sales. Any tick up in sales that we're seeing recently is probably more a result of foreclosure sales. And
that's a great point. Diana said that today because I was focusing on that 2% increase in pending sales on the West Coast, saying, oh, is that a good sign for California? She said, probably not. It's probably foreclosures.
That's right. And you can see that also in the prices. Prices are falling very rapidly, and this is probably because the foreclosed units are being sold at a large discount. So I think in terms of real activity, in terms of sales and construction, probably close to bottom, but we're not going to see any upward momentum for any time, certainly not any time this year, probably not into middle of next year. In terms of prices, we still have a ways to go. I expect that home prices are going to decline by another 8% before the market completely bottoms in the middle of next year. Given the large amount of inventories that are still available on the market and the fact that there are a lot of foreclosed units out there which are pushing down prices, I think prices still have much farther to go.
All right, John, Celia, thank you very much.
You're welcome.
You're welcome.
All right, and we just want to get some headlines.